because my Queen's Court pick is the last earnings report I'm going to cover here today, and that is Boston Science. Boston Science comes in today following an earnings report of 40 cents versus the expectation of 37 cents. Revenue came in fairly decently above the expectation of 2.9 billion, coming in at 3.1. That resulted in a medical appliance company increasing yearly revenue 53.6%. Then they came in and they affirmed their quarterly guidance, but they also said, you know what? We've came through some tough times, and we're going to continue to go through some tough times. We're talking about a medical appliance company, which has been through very difficult pandemic times, no doubt about that. But we're going to maintain our quarterly guidance. But you know what? We're going to increase our yearly guidance. And so we officially do have the hat trick on Boston Science with a beat, and an increase in guidance. Here's why it's my Queen's Court pick. Number one, Boston Science is a fundamental company. It does have some valuation concerns that I feel will get shored up over the next year. EPS numbers got really rocked during the pandemic and have had a very slow path to recovery. When you're talking about Boston Science, by the way, Boston Science, former member of the Tackle 25, but Boston Science currently does have a PE ratio of 316. Now, the context I want to provide for that is PE ratios take price divides by earnings. The EPS number this year has seen a contraction of 119% as medical appliance companies have fallen out of favor with the market, given the fact that their revenue streams were completely shut down due to the pandemic. Their path to recovery is very simple, as the EPS expectation coming into the end of this year does increase to 16%. Over the course of the next 5% should stabilize versus what it was before the pandemic. So we're talking about a company that's on the path to recovery. We're talking about a company that valuation, when you look at the raw numbers, is very, very, very concerning. When you dive into the detail of what creates those valuation concerns, you certainly understand it based on the context. Now, what I like about Boston Science right now is you're talking about a space that is on the path to recovery in the medical appliances space, but you're also talking about a sector that is one of the more consistent performing sectors in the marketplace and one of the highest rated sectors in the marketplace as well. It's based on our rankings there at Tackle Trading. It's also a sector that has broke out just late last week, and then you're forming a little bit of a flag-based pattern in the sector that I feel has a chance to get gobbled up as that 9 EMA does approach. And now coming back to Boston Science very quickly, and I've said a lot over the last 10 minutes, so I'll shore it up here very, very soon. But coming back to Boston Science, I like it with the price response following a positive response to earnings. But the reason I like it is because of the consistency of technical analysis. This 46 handle is not random why price started coming down at 46. It is a major resistance zone. I like it on the positive earnings response. I like it on the breakout of 44 and change. I like it for covered calls as it navigates the 46 handle. Once it breaks out of 46, I do think this is a very simple open up that risk graph, allow price appreciation while we look at the trend to develop. Boston Science following a positive response to earnings, couple that with the technical breakout and continuation breakout of 46 is my Queen's Court pick for the day.
Queen, we're right into it. So you want to do the analysis now, or do you want to get all three of them? And then it's your court. I should not even be speaking right now. I'm going to get floated. So
it takes him a while, but he does learn.
Boston.
I don't know that he ever does.
That was, stove's hot. I forgot. Stove's hot. I'm
going to pick Tal Education Group as my Queen's Court. I'll float myself.
Oh, goodness. No, let's keep it going. I will take the next person that wants to present their Queen's Court. I don't know if Mark wants to go.
Either way.
I'm at the deference of my queen.
I'll go. I'm up. Give me the industrial sector, XLI. We got a healthcare pick. By the way, healthcare is one of the strongest sectors. I love the pick on BSX.
By the way, XLRE is a secondary pick. I do like the breakout here a lot on XLRE. Just
Secondary
another.
pick. Throw a little cherry on top. Little
Little
cherry
cherry,
on
little
top.
cherry.
I like it.
I just like the diversification the ETF provides on the backdrop of some amazing earnings reports. One of the better sectors in the market right now from an earnings season perspective.
Clean high base breakout and
Yeah.
a nice trigger here today. Yeah, XLR is looking good. Give me XLI. I'm going to go, kind of in a very traditional type of pick here for Queen's Court. And a couple simple things. Number one, XLI right now is been an underperformer for a couple months against, say, things like technology, but it was one of the strongest performers for the better part of 6 or 7 months on the economy reopening themes and all those type of stuff. If you've been watching the headlines, catching it on social media, you probably are aware that the politicians in Washington continue to debate infrastructure and move the process forward. And whatever the headlines are saying, don't even sweat it. They are going to pass something at some point here over the next little bit. That's my personal belief. I think that's where the markets are pricing in an expectation. So you're going to have the backdrop of infrastructure that will be there. Now, I don't necessarily know if that will be a short-term catalyst or a long-term catalyst. I'm interested in it from both, quite frankly, see what the price response will be. XLI's got a very, very clear resistance zone. A couple of different components in the sector that I want to highlight. Honeywell, who had earnings already. So some of the names that have already come out and reported, look at HON, pushing towards a high base, or not necessarily high base, but a breakout over a long-term consolidation, beautiful weekly chart breakout. One of the leaders in the sector, by the way, $160 billion company that could continue to bring those tailwinds up throughout the space. Boeing reports tomorrow. Not too worried about that one. Raytheon, though, RTX, who was highlighted today by Coach Matt during earnings roundup, is pushing the $90 breakout with beautiful chart momentum and that trend. Then you give me the stock that I'm going to propose to the Queen here today, John Deere. And I love tractors. I like the company. I've always liked the company. I don't necessarily love swing trading this stock or a lot of these industrial names. I love position trading on many of them. And if you look at that trend or long term, it was just a huge juggernaut performer for so long here. And what I like about Deere, yes, it was on the option report, so it makes it technically sound. We know that anytime a stock is on the option report, it's technically sound, and we get that part of it. There's several things you can do with this, Emily. Number one, you got earnings not out until the late part of August. So we're not really dealing with that. You can use all forms of creative spreads. If you're concerned about the left of the chart, diagonal spreads are in play. And I know that's one of your core strategies because I mentored you and I know that you love cash flow and vertical and diagonal type of spreads. Implied volatility is mixed right now. So if you are going to go to the options market, I would do a vertical bull call about 60 days out, because you're only going to be in it for a little bit. I actually went and mapped these out on the risk graph as well. There's a date at 52 days in that September. That would be the one I'd play. Vertical is the simplest way to play it. And it's the way that I would propose to the Queen that is, probably the best way to play it right now based on the volatility. It's in the middle of the cycle. You're going to be building into earnings. You don't want to get that volatility build working against you. You want to get it working for you. So bull call spread or equity, you can always just simply play the amount of shares that you want to play with Deere, play the breakout, catch the momentum, only if industrials does confirm. So my Queen's Court pick is John Deere, leader in the sector, and also right in line with the sector technicals, aiming for a breakout.
Very rarely have you ever seen a trend like the consistency of John Deere over the course of the last, like during the pandemic. It was amazing.
Yeah.
Just a thing of beauty on that daily chart. Look at that thing.
100% in the last year.
So consistent.
Yeah.
All right, Mark, you're up next.
All right, my pick is another defensive area. My Queen, I brought you defense last week. I bring you defense this week in a time where I'm personally, skittish or whatever, and the market's a little. I like stability, and as I talked about earlier, I like the stability in defensive areas of the market. My pick today is going to be Wal-Mart. Now, you've got a lot of defensive choices, right? I thought Boston Science was an excellent choice. I think, there's lots of good choices. Brought you Pepsi, Coca-Cola has been talked about on the show. I think there's a lot of good defensive choices out there. I also want a defensive choice that I think can have some oomph. Now, the reason I'm specifically picking Walmart, aside from it being Walmart and a company that I trust, a company that I believe in, a company that, it's Walmart, right? You're almost self-explanatory in the name. But I think a theme could develop that strengthens his fundamentals even stronger. You don't need this theme in order to justify. You could have a nice breakout of current resistance, potential position. You can cash flow down below. Although the volatility is very, very low on Walmart, it truly is a defensive. I don't want to mess around with everything. I just want to put my money to work. But the extra theme I see developing with Walmart specifically deals with grocery store prices. You had a CEO come on last week on Fox Business talking about how, listen, we're seeing this tremendous increase in the cost of what we're having to buy, and said it is getting so serious that we could see increases of grocery store prices by 10 to 14% by October. It's a pretty outlandish statement. That would be a massive increase. So take him for what he's at, but you don't need to take him for what he's at, because you're starting to see in report after report, like out of Kimberly-Clark last week, price of goods is going up. Makes sense, right? Raw material producers have to pay more. They have to pay more. They pass it along the line. So we see those inflationary pressures. Well, the one thing, if grocery stores continue to climb at escalated rate, if packaged goods continue to rise at escalated rate, people got to eat still, right? People still need those consumer staples. That's why they're called consumer staples. And consumer staples, by their nature, they're part of the everyday life. They're not a discretionary item. And if you see increases in these type of percentage wise, it's going to put pressure on real Americans, because their wages are not going to escalate at the same rate as the cost of goods they're going to have to buy. Like it or not, and I know Walmart brings out some negative sentiment in some individuals. I don't personally share that, but I understand the argument. I respect the argument. I really do. Walmart has tremendous purchasing power. They have amazing pressure to put pressure on those suppliers. If grocery store prices go up, price of goods at Walmart is still going to go up. But I suspect that the prices of goods are not going to escalate at the same percentage that others do. If real Americans aren't keeping up with their wages at the price of inflation, they still got to eat. And I think the pricing power and the general discount nature of Walmart attracts a few new customers, certainly retains the ones it has. So in an area of the market that's defensive, that at a minimum is defensive right now by its nature and is showing some real resoluteness, I think you could do a lot worse than Walmart. Additional theme tacked on, specific ways to play. If you see some in staples, because it's pushing its resistance area, you see a breakout potential. I think there's some position trade directional opportunity here. If you want to be real conservative, you have a rising 20 monthly in which Walmart has tested it a couple times along the way over the last couple years, came back to that 20 monthly, bounced pretty clean like it has. That's rising up, acting as and it's on the monthly chart, it's rising act as a nice secondary trend momentum indicator that lobbying naked puts above that 20 monthly. We're waiting for pullbacks. It's bounced pretty clean over the last couple years. I would expect, especially in this environment, for it to do the same. So a couple ways to play, like the space it's in, and I think the theme has some legitimacy.
All right. When is our earnings on Walmart?
I don't know. I'm still stuck on the momentum indicator on the monthly chart.
I see it. It's August.
Late August.
It's 4 weeks.
Yeah.
We got a month.
Yeah, we got a month. We got time. Okay, let's start with Boston Science. Let's go back to that chart here real quick and take a look at it. I've traded Boston Science for quite a bit. Like you said, it was on our Taco 25 for a couple of years, and I actually did not have it on my watch list. I took it off my watch list, and now that it's kind of broken out of this nice little channel that it was in, that resistance level there at 44, 45, kind of like it here. I would want to see it, just kind of settle down for a few days. Give us what we call that Cody special. Maybe it retraces back to that resistance level and then bounce back up, or just kind of high base there at that 46 range. You can do quite a bit with this, right? It's an inexpensive stock, right? You can do quite a bit of things with this. Covered call, poor boys cover call, whatever, naked puts if you've got enough premium there, which you definitely do.
Well, in AM, anything under 46 is just covered calls. Like
Yeah.
cover it, cover it, cover it. You open it up on the breakout of 46 eventually.
Yep. So I like it for that it's in a price level where pretty much anyone can add this to their portfolio. So for Boston Science, I'm gonna say she's gonna be a keeper. So therefore, you will not
Get it on the watch
your
list.
today.
You guys, I'm dancing.
And it's 90 degrees out here today. I'm feeling very lazy-ish, and all these trades that you guys have given me are like, they're like what I'm looking for right now. I've been in and out on vacation with my parents, so I'm looking for just nice and easy stuff to put on my portfolio. So this just qualifies as one of those. John Deere, let's take a look at that one.
Now, specifically, the Deere you're looking at a directional trade above the breakout channel, correct? Okay.
Yeah, I believe so. Yep.
Either long equity option trade, just it's a breakout trade though.
Absolutely. So this one is kind of like a wait and see, put it on the watch list, put your alerts there. If you get that breakout, go ahead and do something with that. Earnings is middle of August, so we also have
plenty of time
with that. So that is also a good play. Price wise, if you're doing a bull call or something like that, it's going to cut down on the cost of that. I probably wouldn't do the long equity there. I wouldn't just go equity. I'd probably just do an options play. I got 2 Queen references, and he did call me Emily once. I don't even look at what he's presenting. I just listen to how many times it refers to me as Emily and how many times it refers to me as Queen. Mark will always go my Queen, and you just go, oh, Emily, this is what I'm looking at, and I'm like, oh, there he goes again.
Yeah, respect.
I've already.
But I like Deere. I like this setup. I like the space, especially if we do get a break on industrial. So I cannot chop your head off just because you refer to me as Emily, but I should.
Isn't it just constant? Like you can't, you want to, but you can't.
Eggs. He likes the eggs.
You now know my last 43 years, Emily.
I want him to live. I don't want to kill him. I don't.
Listen,
he does it to himself, literally every week.
It's tough when you're looking at some of those industrial giants, right? You get a breakout here. I think you got to be looking at least at one of those right shoulder breakouts, like the John Deere one, or if you're looking at the Raytheon continuation, anything not named GE, I would say, like the Honeywell, not the right shoulder breakout on Honeywell, but the all-time breakout on Honeywell. Like, I do think. I do think that I like it too. I like it with industrials breaking out. If industrials doesn't break out, I'm kind of lukewarm.
It's a no-go.
Yeah, I'm with you on that.
I like it. So I'm iffish on this one here. With Mark, the fact that it's Walmart, right? And I like how you kind of have your theme, and with this one here, you like you said, you almost don't even need a theme. It's Walmart, right? Nice little channel there. It's looking to break out. Weekly looks even better now that you brought it, pulled it out. Earnings is far enough that you can do something here with Walmart, and kind of the same thing. We're in this area of the market where, if it breaks out, it has the potential to run.
Mark, you like it covered calls? What did you say? Or you directional?
My first call on Walmart is directional, and I don't go that.
Yeah, I was going to say. I thought I heard you say.
I'm like, if you wanted to play, just like I just hate this market, but want to do something, covered calls above the rising 20 monthly, if that's your market posture. But I personally lean to directional position trade here, or entry into an investment is where I'm leaning.
I mean, Walmart's not a great tradable instrument, right? But you do have supporting technicals on a fairly decent breakout, Em.
I see.
I know. Listen, I know it's Walmart, and when I thought about this morning, I was like, bringing Walmart to the Queen, but I have to bring what I think is my best.
You do.
Even.
So, Queen, what do you think?
Let me
Calling
see
for
Deere
blood.
again.
They're calling for blood.
They're calling for blood. Oh, today they're calling for blood when I don't really want to,
Well, to be fair, Adib,
put
I
blood
think,
on the
was
street.
talking about me. He said, please, no mercy. So-
Well, there we go. I mean, the crowd has spoken.
Oh, see, it's a
Ah,
thing.
it's a
Every
thing, man.
week, every week, they're
week.
like, Tim's blood. Like tackle just collectively starts grunting.
Ah,
"Rrr, Tim.
I don't know. This one is like, I don't know. I like Deere, I really do, but he just had to refer to me as Emily, and I don't know. I like Walmart too. I'm conflicted.
I since I am survived, can I aid
Yeah, why don't
my
yeah,
queen?
absolutely. See, Tim, take notes. My
They
queen.
by the way, hair looks tight, queen. When I'm looking at these, because they're both breakout plays, right?
Like, yeah.
So you kind of got to look at them fairly similar, right? We're talking Walmart, we're talking Deere, but they're both looking at potential breakouts. Okay.
Mm-hmm.
When you're looking at Walmart here and you look at this sector's breaking out against the all-time high off a little bit of a high base. Defensive is, I don't want to say is in favor, because from a trend perspective, I still favor other sectors, but it is becoming in favor. Defensive is becoming favorable to the market right now, especially in the summer lull where participation has been a little waning, right? And so you got to like Walmart but Walmart has been underperforming its sector, by the way. And so I hesitate directionally there with something that has been underperforming the sector. I like the breakout potential of Staples. You couple that with Walmart's breakout potential, you got to like it. But once again, Walmart has been underperforming. So you're looking at catch up type analysis. I don't like the potential for Walmart to catch up to the Staples sector here. I think it performs with the Staples sector at this point. I don't think it outperforms. And then when you look at the cleanliness of a potential breakout, the top side breakout channel is a little choppy. You go from 143 and change all the way up to 145. And then even if you break out of 145, you're still staring left of the chart at 146. That becomes a very difficult short-term trading environment to be in. When you're looking at, and it does get a little bit clear above 146, but again, you're staring at 150. So when you're looking at the John Deere breakout potential, I do think the John Deere breakout is cleaner, in my opinion. The breakout channel is right there north of 357.65. You look at that from an hourly chart, you see the cleanliness of that breakout right there at 350. That 350 and change is an overnight action. You're really looking at the 357 and change breakout here. So I do think the John Deere breakout is cleaner. You got the same degree of supporting data on the industrial breakout as you do the Staples breakout. So I don't think the sectors are would play that substantial of a role in the success of the trade. Also with the John Deere breakout, you got a little bit of a cleaner targeting mechanism. I do think you have to take into account 368. That's an old support level over here, deemed multiple different times, and not just from a moving average perspective. That is true horizontal support that got tested as a resistance channel. That has to be target number one. Target number two would be the not the all-time high 400. You got to go south of that at 386. So I do think the trade structure is much more clean on John Deere than Walmart, but John Deere is also a better short-term tradable instrument historically than Walmart is. Now, if the trade called for a cash flow environment or some type of position to 3 to 6 months, maybe I would advise you on Walmart. It is the safer play of the two if you are looking for that. But if you're looking for the cleanliness of a swing trade, John Deere is the answer here.
Yeah, but he called me Emily.
I know. I know. It's tough to overcome.
Matt also called you Emily. So,
No, I didn't.
No, he didn't.
Mark did too. I'll just keep throwing.
No,
stuff.
Mark has
You're
always
just
referred to
making
me
up
as my
stuff
queen.
now.
You're just
I
making
called
up
her.
stuff.
I called her M when I was in an advisory role.
I've been instructed by very, very trusted allies that I should run as fast as I can. That is what Jonathan has given me the advice in the chat.
Yeah.
He said, Tim, try to sneak out while they're talking Walmart.
Oh my goodness.
If you're looking position M, I do like the Walmart from a position a little better. It's got a better supporting theme right now than the economic sensitive industrial sector.
Yeah, no, I really love both. I'm not in a chopping
There you go.
type
You
of.
don't have to chop.
We're
Yeah,
not
I don't
chopped
feel like
today.
chopping today. I'm not
Oh
chopping.
wait. Tim just said he wasn't chop. Oh, you should chop him for that.
She said, I'm not in a chopping mood. No,
I'm
we're
not in
taking
a
it.
chopping mood.
Segment over.
I like them both. But Tim, this is your final warning. You refer to me one more time as Emily while you're in Queen's Court. You're not even going to finish your analysis. Like.